Welcome to The Weekend with me, Steve Savant, insurance columnist and host of the Business Insurance Zone, the daily news talk show on the internet. We're on Producers Web, one of the big industrial sites in the United States on the web that talks about insurance, producersweb.com. And I had an article titled Life Insurance Proposals, Vapor on Paper. And I got a lot of flack from my colleagues because I brought out some of the ideas of supplemental income using life insurance, and in specific to indexed universal life, which I love as a retirement supplement. But here's the deal. In my article, which you can come and get over at Producers Web and make comments on, because I have it now distributed on all our websites, I bring up the idea that if we're going to use indexed universal life, that we want to look at three different ideas when we're constructing it. And the first idea is that we always want to suppress the death benefit as low as I can and obey the IRS code under TAMRA, DEFRA, and TEFRA. I always want to be able to make sure that I'm always in compliance with the IRS in this regard so that I can suppress the death benefit low enough to keep my costs contained. And that's the name of the game in cost containment. And I think most people now know that this is the way to actually illustrate proposals, to actually design them by suppressing the death benefit and keeping the expense loads as low as they can. However, we're still seeing so many people show illustrations anywhere between 8.3 and 9.1 using the carrier's 20 or 30-year look back. And I suggest to you that that's probably a little bit unrealistic. When you think about it, these contracts were really built and constructed basically to be about 200 basis points above the current assumption interest rate. So if the best rate out on the street right now, which is 5 at any current assumption UL, I can add about 200 basis points to that and get my number up to about 7. That's a comfortable number I can deal with because it was built and constructed to be that way. The flip side of that is I've looked at other avenues and other models, whether it's S&P at 585, which includes the dividend, or the Monte Carlo theory that came out recently using two 20-year tranches, which they had their number at 5.5, which is, I think, is a reasonable bookend quote. So when I want to quote Index Universal Life, I have no problem showing the 20 or 30-year look back, but I'm really looking to see what can I show also that's reasonable. So I always show the secondary rate or my 5.5 rate because I think that is a reasonable rate for indexed annuities, indexed universal life. So when you're constructing your proposal, when you're putting this together, just remember, look at both sides. Do what I call a bookend quote. Do the 5.5 and do your actual 20-year, 30-year look back.
Companies in our business are always touting service, products, and underwriting. And we do that too. But here's the difference. Now enter the world of the elite producer with a value package that cuts us out of the pack. A BD that approves social media marketing of non-FINRA products and doesn't take an override. With the best competition desk in the industry, and for our loyal producers, a true group health plan. No one offers that. Brokers Alliance does.
Well, welcome to The Weekend with me, Steve Savant, your host. And again, I'm on producersweb.com where I have my article, Life Insurance Proposals, Vapor on Paper. I want you to be able to think about how to construct these illustrations so that I use a floor rate of 5.5, which is, my view, is a good historical number based on the Monte Carlo 20-year tranches. Their history is great. And to go ahead and use what I would call the 200 basis point above current interest rate number, which right now the current interest rate is about 7%. And we're now going to use that because that's about 200 basis points over the 5%. You're looking at indexed UL. It's great for retirement, but it's got to be priced and placed on the proposal correctly. 5.5 the floor and 7% probably the high end. If you want to use the 20 and 30-year look back, go ahead and do it. Let's just show all three. That's The Weekend with Steve Savant. See you next weekend.